Hi, I'm Costa, and I built a trading algorithm that trades multiple digital currency assets, things like Bitcoin, but also commodities like gold, silver, oil, and even indices like NASDAQ, SPY. And they're all using the same structured framework that I'm going to show you in the demo today. But in today's demo, I want to talk about silver. That's because for years, silver had been stuck in a broad range. After the 2011 peak near $50, it spent over a decade failing to reclaim those highs. Every rally into the mid 20s and low 30s would stall. Structurally, it was a market that repeatedly disappointed breakout traders. But recently, something changed. Silver finally broke out of that multi-year range. It pushed through long-standing resistance levels that had capped price for years. And that kind of breakout attracts attention, just not from just retail traders, but from funds, momentum strategies, and macro participants. And when a market clears a decade of resistance, it becomes a narrative. And we saw that. It's an inflation hedge, it's industrial demand, monetary instability. It's going to be needed in every single battery and AI chip that's ever going to be created. You start hearing all the reasons why this time is different. And during that breakout phase, price was trending really cleanly. I'm going to show you exactly what that looked like here. Let's just dive in, because what I've done is I actually put my algorithm onto the silver trade so we can see exactly how it performed when it was trading this asset. So let's bring it back down. Let's go back. And let's see what the story looks like as the asset was trading. Now, have a look at all the entries here. You can see that the system was doing while silver was structurally strong, right? The market is trending upwards. We've got higher highs. Let me put it like this: higher highs, higher lows. Momentum is absolutely constructive. Volatility is supportive. There's nothing chaotic here. You can just see it moving upwards, and the algorithm is simply executing. You can see the base entries, which are the blues, and the take profits, which are the purple ones, and then we simply reset. Base entry, take profit, reset over and over again. As you can see here, bang, bang, bang. Look at these entries just over and over again. It's actually pretty insane to look at. And I've got it here on a 15-minute. Now, there's no predicting here. There's no guessing. It's just reacting to the aligned conditions. When the trend filter is bullish and structure is intact, what it's doing is deploying the capital. And it's extending into that strength. It's systematically taking the profit and waiting for the next qualified setup. So as you can see here, entry, take profit, entry, take profit. And then here we've got some defensive scaling, and we're able to take profit at a lower price than the entry there. It's really, really cool to see the algorithm doing that. Again, it's all structured, it's all mechanical, it's repeatable, and this is automation as well. We can automate this whole strategy as well. But here's what often happens after major breakouts like this. Early breakouts are healthy, but late breakouts, they become overcrowded, volatility expands, momentum starts overstretching, and eventually the structure weakens. And that's what we saw in silver. And we've got it right here. I'm going to stretch it out so we can see it. Look at this here. It's pretty wild. We can have a look at the extent of this drop extremely quickly, almost 41%. Let's have a look at the days as well. 41% in around 3 days, 31% in 3 days. Wow. The higher highs stopped extending cleanly, pullbacks became sharper, the volatility began expanding in the wrong direction, as you can see with that red there. And the market simply just rolled over really quickly. Now, this move down wasn't a gentle replacement. It's aggressive enough to trap late buys and expose systems that weren't filtering for structural deterioration. And you can see how there's something interesting going here. If you have a look back here at all these trades that we're taking, have a look at all this here. What stands out here is we don't have one single trade. So that's what the algorithm did. It did nothing. No new entries, no trying to catch the falling knife, no assuming that prime momentum would automatically return, because the trend filter was no longer aligned. The environment had changed. And this is where many traditional bots struggle, especially ones that you buy out of the box, that are black box, that are listed on exchanges. Most of them are grid bots, and they assume rotation. They're designed to function inside ranges. When a market transitions from expansion into breakdown like this, they're not able to track that regime shift. They just continue placing orders at predefined levels. And to be honest, basic DCA bots operate similarly as well, because they trigger entries and then percentage-based pullbacks without distinguishing a healthy retracement in an uptrend or a structural failure. And what you're seeing here is you're able to see it picking up that structural failure. A regular grid bot or DCA bot as well would just be executing the mathematical rules, and they wouldn't understand the context. But an adaptive algorithm like this one, it absolutely does. So when the structure deteriorates, that exposure is reduced. When volatility becomes unstable, that selectivity increases. And what's happening here is you're seeing waiting, and it's actually waiting as well for the strength before it enters into the next trade as well. So this was the correct way to handle the trade. But this kind of patience is extremely difficult to maintain manually, because imagine if you've just been going through that huge run up here. You know, there were times when the market retraced and entered and took profit. Maybe you'd panic. Maybe we wanted to enter here. You know, you'd be sitting at your computer on your charts thinking, you know, when's the next entry? When's the next entry? But of course, the algorithm waited fully until that had executed. And like I said, emotions will tell you to buy the dip. Ego will tell you that you're early. Fear of missing out would have pushed you to act. But the algorithm doesn't feel any of that. It just follows the structure that you can see here. And when silver did eventually stabilize, when that volatility compressed, when higher lows began to form again, as you can see now, the system re-engaged. And we'll just follow that a little bit further, see where we are today. Here we go. Again, simple. There we go. That's where we are right now. So you can see the system's re-engaged, and it didn't buy the euphoric top. It didn't buy into the collapse. It bought after the structural rebuilding had happened. And that's the difference between automation and adaptation. And this is what makes algorithmic trading really, really powerful. But this kind of framework, it wasn't built overnight. You see, I have a global team that's based in Australia, the United States, and the United Kingdom. And we've invested thousands of hours and hundreds of thousands of dollars into research and development, testing, and infrastructure to give us an algorithm that is powerful like this. And what we've also built is highly customizable. I can quickly dive in and show you a lot of the settings here. They're fully customizable settings. There's so much we can do, from start-stop levels, working on special exits, trailing take profits, locking profits. We've also got hedges. We've got Bollinger Bands that we can use to help us decide our entries. There's so much going on here. It's like a Swiss Army knife for algorithmic trading. And it's really amazing at trading multiple currencies, digital currencies as well. Like I said, we've got ways that we can trade commodities like silver and oil, but also the standard coins like Bitcoin and Ethereum, if you like, as well. The core logic, though, is about finding a structural alignment and then using volatility filtering for that systematic execution and making sure that everything remains consistent. And the configuration can be adapted, like we said, depending on the market and depending on the objective. So this isn't some kind of one-dimensional bot that you usually find. This is really an algorithm that has a multi-asset framework. And if you want to understand how it works, and how it works to, you know, filter the trends, how it adapts across asset classes, how we trade it we specialize trading it on Bitcoin as well, which has huge liquidity and good amount of volatility as well, then you can use the links in the description to book a call with my team. We'll walk you through the structure, the logic, and how it can be configured in different ways to suit what you need it to do. Because in the world we live in right now, we are living in volatile conditions, and the real edge isn't about prediction. The real edge you're going to find is from structure, and structure can be coded. And that's exactly what we do at Minotaur Trading Systems. So if you want to learn more about the algorithm that we've created and how you can use it as part of your own trading framework, then go ahead and book a call in the description below.